Hey everyone, Brian Bogner and Greg Towner here with Parallel Financial, and it is time for our post-election economic and market update. It has been an interesting couple weeks, to say the least, for all intents and purposes. And again, we talk about these political things because it does somewhat matter in terms of what's going on with the markets, but we're not trying to make a political stance or political anything like that. So just know that when we talk about this stuff. But it looks like Biden will likely win the presidency, and it looks like the Republicans will likely hold the Senate. And we believe the market is loving this for a number of reasons. Even though a lot of Trump's policies were positive for the economy and the market, there was always a lot of uncertainty, right? I mean, he would just announce trade tariffs or, did the trade wars, things like that. Entire industries would get affected overnight, and you just see the market move up, down, things like that. We don't think that's going to happen with Biden as president. And with the Republicans in the Senate, there's likely not any overarching, real significant legislation that's going to get passed that would change something. And so that's why we think there's a lot of tailwind right now in the market going on, even in spite of all these things that are happening, COVID resurgence and some of these things that are going on out there. So let's go ahead and get started into these charts. Greg, take it away.
Yeah, you're seeing exactly what you talked about play out in the market. And it's a long-term chart of the S&P. And despite all we have going on, obviously COVID is still a real thing. The market has recently hit a new all-time high. When I say the market, I'm referring in this case to the S&P 500, because we know over the last several years, that's kind of what's been driving the market, Brian. The larger names, the big tech names, those sort of things, they're still doing okay. They're still doing fine. But what we're really excited about is we're starting to see the rally broaden out to other areas of the market. This is a small cap index over the last few years. It's not quite to an all-time high, but we can see that it's surged here recently over the last few weeks. It's up to a recent high. And that's not the only area. International is starting to do well. I mean, we can look at this emerging market is near an all-time high, breaking out to recent highs. And so both international and smaller cap in the US, it's actually been outperforming the S&P 500 here in recent weeks. So whether that continues or not, it's hard to say, but we like the broadening of the market. It's not just a handful of names moving things. It's really getting diverse at this point. And that's positive in our view. And along those same lines, there's this, we know this is a little bit of a messy chart here, but we think it's very important. This is a really long-term chart at the top, goes back to the 1950s. And at the bottom, it's basically just an indicator that measures momentum and thrust in the market. And so you want to see some good strength, number of new stocks making 20-day highs. And so we see here recently, we've had two instances where this threshold was met just in the last couple of weeks. If you look back over time at the top charts, all those green arrows are when similar indicators happened in the past. And the data shows, looking out 6 to 12 months, really strong historical returns. Of course, we never know if it's going to be the same time as all the past times. But historically, this kind of momentum thrust looking out into next year has been a positive. So that gives us some positive hope looking out. Now, a couple of reasons to maintain a little caution here in the very shorter term. We talked about some of those positive things that have developed. I'm getting past the election. Obviously, we've seen some good vaccine news. Investors have recognized that. They've gotten a little bit more positive here. This is a survey that indicates how many people are bullish compared to bearish. It's reached a recent high after being negative almost all year. So that's not necessarily a terrible thing. We don't think it's at super extreme scary levels. But in the short term, maybe things have gotten just a little bit ahead of themselves. Doesn't mean we have to pull back, but maybe just a little pause. And along those same lines, we've actually seen not just surveys, but we've seen actual money flow. If we look at this next chart, the money has flowed into the market in the last couple of weeks, post-election, post the vaccine news from a couple of companies. So, hey, that's great that money's flowing in. There's been a lot of cash on the sidelines. We've talked about that before. But again, just in the shorter term, maybe keep in mind that, hey, things won't only go up. There could be, the market may not be set up. If there's any kind of negative news headline, the market may be a little bit vulnerable in the short term.
Yeah, and I think this number too, if I remember correctly, even though it's slightly above what happened here in 18, but this number, if I remember correctly, was like a record going all the way back to the I know this chart only goes back to 08, but back to the 90s or something like that,
Yeah,
if I
think that's right.
if I remember. So it's pretty significant move. Let's talk a little bit about the economy, okay? And here in America, we are a consumer economy. I mean, we do make things, and one of the good things that are happening, especially here in South Carolina, we live. There's a lot of onshoring coming back, where production is coming back to the United States. But at the end of the day, we're still a net consumer driven economy. And so retail sales are real important to follow to see how we're doing. And retail sales are at all-time highs. I mean, in spite of all the headlines you read, in spite of COVID and all these things that are happening, retail numbers, sales numbers, right? So this is you and I spending money at, maybe in the store in person, maybe online, but we're at all-time highs. So that's a positive. That's a positive for the economy. And then, of course, home prices, right? It doesn't take a rocket science to know that home prices have been going up. And who are buying these homes, right? People, right? People right here, working people, retired people, all types of people, they're buying these homes and supporting these home prices. So these are two very, very positive economic figures that we look at that help support our thesis that, that we continue to be bullish on stocks, right? And so in summary, international and small caps, right, we're seeing a much broader base move up in the market here. That breadth thrust indicator, that 20-day high indicator that Greg talked to you about, indicates, next 6 to 12 months returns are usually positive. We're seeing areas of economic strength, right? But we do have a little bit of caution, right? We think maybe the market's got a little bit ahead of itself here in the short term. Maybe we see a little pullback or what. But and lastly, one thing, we didn't have a chart on this, but seasonally, historically, November, December are your 2 best return months of the year in the market. And this goes way, way, way back when we look at the S&P returns over that time frame. So we've got a lot of positives here. And if you have any questions about anything, give us a call, shoot us an email. Thanks so much for listening, and we will talk to you soon.